Hi there, I'm Ivana. Thanks for coming to my major motion picture. This video is not a step-by-step how-to, but will give you some helpful tips for the quality review process. Quality review is extremely important, but it really isn't that hard if you know what you're doing and how to use your resources. Here are a few important things to remember before you start. The QR process is very similar to the prep process, but the information has already been entered. We want to make sure that everything is accurate, so don't assume something is right. You are going to want to make sure all of the client's paperwork has been completed accurately and that there aren't any looming questions. Assuming that everyone else has done their job correctly, the QR process is somewhat repetitive. You should be asking the client the same questions that they have already answered for the intake specialist and the tax preparer. Use your QR checklist so you don't forget any steps. Finally, this is the last step to check for typos, errors, or any numbers that just don't quite make sense, so be sure to be thorough. Now, let's take a look at our pro quality reviewer Joey and see how she's doing with her client Sam.
Hi, I'm Joey. I'm going to review your return today. I'm going to look through your paperwork and then go through each item that your preparer entered to make sure it's correct. This will take me a few minutes. I'm also going to use a step-by-step checklist to make sure I don't miss anything. I will also need to see your ID and social security card again.
You need to see all that again? I've already showed it to 3 people.
Sorry about that. We just have to make sure we're doing everything right. Also, I see here that you marked that you were single. Have you ever been married?
Yeah, I was married a long time ago.
Gotcha. When did you get divorced?
Well, I haven't seen her in 15 years.
Okay, but did you get legally divorced?
No, we're still married.
Okay, in that case, I'm going to have to change your filing status, since in the eyes of the IRS, you're still legally married. Since I see you don't have any dependents, your filing status would be married filing separately. You don't have any kids?
Nope, no kids.
Do you live with anyone?
Yeah, well, my mom lives with me.
Okay, whose house is it?
I rent it.
Do you pay all the rent and bills?
I do.
And does your mom work or have any retirement income?
She gets a little bit of Social Security.
Okay, well, it sounds like to me you can claim her as a dependent. Let's go through the dependency checklist and make sure you can claim her. If that's the case, you can file as head of household rather than married filing separately, or MFS, which is probably going to save you a little bit of money.
Fantastic.
See what Joey did there? She was able to dig a little deeper and find out a little more about Sam's situation. She has now corrected Sam's filing status and found him another dependency exemption. Now, it does not always go this smoothly. It can be a big hit if a client actually has to file MFS, but the law is the law, and we have to make sure we're doing our best to prepare accurate returns. You always need to verify all of the taxpayer's information and paperwork and ask questions to clarify anything that you need to complete an accurate return. Then you will move on to checking the Federal Information Worksheet. Most of the credits and taxes calculated by ProSeries are based on responses marked in the Federal Information Worksheet. Make sure you review these answers thoroughly. The easiest way to do this is with the provided step-by-step checklist. Many of the answers are found on the IRS 13614 intake sheet, but it's a good idea to double-check with your client since the questions can sometimes be confusing. Remember to use your resources, including the Ladder Up Manual, to answer any of these questions if you are unsure. Be thorough. There are some easy-to-miss items. See here in the dependent section, the boxes that get filled in here are easy to overlook. But the codes that are entered here can mean a big difference in credits, like the earned income credit. Make sure they are filled in and correct. Similarly, Part 4 has 2 tiny but oh so important questions used to calculate the earned income credit. Make sure they're both answered. Errors should populate in the software if the client qualifies and they are unanswered, but it's best to verify them yourself. Another place we miss things is way down in the middle of Part 10, but these questions can mean the difference between important credits being calculated or not. They are surrounded on both ends by questions that we do not need to answer, but following the checklist will ensure you don't miss important steps like this one, while also letting you know if you can save some time by skipping some things. Now I'm going to use my and my husband Monsieur's tax return as an example. I will demonstrate places where errors can occur and things to look out for. Let's take a look at the W-2 worksheet in ProSeries. Looks good. But wait, I don't work at the best job ever. My husband works there. The tax preparer should have clicked Spouse's W-2 to fill in his name and social security number. It's important to check all the details on each form to make sure nothing is missing or incorrect. It also looks like the preparer used the auto-calculate button for the income on the W-2. This is a handy tool, but we have to make sure it matches the W-2. Uh-oh, looks like box 3 and box 5 are wrong. Sometimes boxes 1, 3, and 5 are not all the same. Looks like the preparer also forgot to check the retirement plan box. Not surprising since it's such a teeny tiny box, but it can make a big difference. Better go back and check that retirement box. And look at that. Did you know the zip code for Schenectady, New York was 12345? We aren't going to explore all of the possible errors that can occur on the tax return. We don't have enough light years. But remember, check for typos, make sure all forms are present, accounted for, and for the correct year and taxpayer. Make sure all the teeny boxes are filled in that are supposed to be. Make sure all red errors are cleared. Now, let's fly on over to the next step. Once you have gone through the information worksheet and all of the documents in Pro Series and have cleared any errors and made any necessary corrections, it's time to make sure the numbers add up. Click over to the 1040. After all, this is the actual tax return. But remember, don't make any changes directly on the 1040 since the software calculates everything here through the worksheets we have already completed and checked. I'm going to go through my personal 1040 with you. When I do a QR, I like to give the 1040 a once-over and then print it out to go over it with the client. You can also go over it with them on the computer. Here at the top of the 1040, we have the client's basic information. The first step is to ask them to double-check for typos, spelling errors, or mistakes in their name, address, and social security number. Here we also see that I have elected to give $3 to the presidential election campaign. My husband, Mr. Wright, has declined. Everything else looks good, so we can move on. Here you see our filing status, which we have verified as the appropriate status. We have no children, and our Pomeranian doesn't qualify us for an extra exemption, so just 2 personal exemptions for us. Now we can move on to the juicy stuff, income. Here you see we have $12,790 of W-2 income. We had $9 of interest on our savings account. Then we move down and see that we received $23,600 from Mr.'s pension. Only $22,850 of this was taxable. Now hold on for a little bit of nitty-gritty tax prep nuance. The 1099-R that we received didn't specify how much of the income was taxable. At first, the tax preparer filled in box 2 with $0, but this meant we were not reporting almost $23,000 of income. That's a big no-no and makes a big difference on our tax return. Luckily, the quality reviewer caught this mistake and asked us some questions. He used something called the simplified method to determine the taxable amount. He also explained to us that if we hadn't been able to answer these questions, we would have had to mark the entire amount as taxable. This wouldn't have been a huge deal, fortunately. This is important to remember. The majority of pension distributions are taxable, so if it doesn't pull through as such, someone may have mistakenly put a 0 in box 2. Did you get that? If not, feel free to rewind a few seconds and watch again. This is actually a common occurrence at our sites, and our manual goes into much more detail on how to complete the simplified method. Then we go down and see my Social Security. I know, I don't look old enough to get Social Security. Because we have a significant amount of other income, some of that Social Security becomes taxable. Luckily, the computer calculates the amount for us. If Mr. and I only collected Social Security, it wouldn't be taxable, so this is a good place to look for any hints that something might be off. Filing status can also affect the amount of Social Security that gets taxed. And the final bit of income is my slots. I do love those slots. Who wins $3,000 on the slots? Me! But that is definitely taxable. Add all these amounts together and we get our total income, $48,601, on line 22. Next, the software calculates our adjusted gross income. We see here that there are no adjustments for self-employment tax or health savings plans. No student loan interest deductions or anything else for that matter. This means that our total income is actually our adjusted gross income as well. This is listed on line 37. Now we get to the fun part. We calculate how much of this income is actually taxable. We see we can subtract $13,850 for the standard deduction because we are married filing jointly and don't have enough to itemize like real estate taxes or mortgage interest. This is a little higher than the standard MFJ deduction because I am over 65. The standard deduction is set by the IRS each year and given to every taxpayer not claimed as a dependent by someone else. The amount varies on your filing status, age, and whether or not you are legally blind. These are the rates for 2016 and usually change a little bit each year. We can also deduct $8,100 for the 2 personal exemption for Mr. and myself. Again, this is a standard rate set by the IRS for any individual on the tax return. The exemptions are the same rate per person, regardless of other factors. If someone else claims you, they are entitled to your exemption, and you cannot claim it on your own tax return. This brings our taxable income down to $26,651 on line 43. This is the amount of our income that we are actually going to pay taxes on. When we scroll down, we see that the tax is calculated for us in the program based on the IRS tax table for the current year. In our case, our tax liability is $3,074, seen on line 44. Keep scrolling to see that we don't have any credits in this section. Common ones that we see at our sites are the child tax credit, retirement savings credit, and education credits. Unfortunately, the Mr. and I didn't have any health insurance last year, and so we each owe $695 as a penalty, also known as the shared responsibility payment. If our income had been lower, the tax preparer said we might have qualified for an affordability exemption. This is a calculation that the tax preparer or quality reviewer can do to see if we qualify for an exemption from making this payment. When you add our total tax and our shared responsibility payment together, our total tax liability is $4,464, seen on line 63. Fortunately, we did have $2,708 in withholding, seen on line 64. If you take a look at line 66A, you will see that that is where the earned income credit would be calculated. We do not seem to get it, and if you are unsure why a client hasn't received this credit and you think they should be eligible, click the quick zoom button to visit the EIC worksheet. Here you can see that our income was too high to qualify for the EIC. Makes sense to me. Finally, we scroll down and see our total payments. The software takes our total liability and subtracts our total payments. In our case, we owe the IRS $1,756. If our payments and credits had exceeded our liability, we would be getting a refund. Time to get some insurance and increase our withholding. Fortunately, the IRS offers several ways to pay a tax debt, so be sure to ask your site leader for information for any clients needing a little extra time or help paying their tax bill. And there you have the 1040. Let's check in with Joey and Sam and see how they're doing.
All right, Sam, like we discussed earlier, you are the one responsible for the accuracy of all information reported on this return. Be sure that everything is correct and all income is reported before you sign. Now that I explained the 1040 and you know that you're getting a $500 refund, can I answer any other questions?
Actually, that all makes a lot of sense to me. I had no idea I could claim my mom, so I'm glad that saved me a few dollars. Thanks.
You're more than welcome. That's why we're here. Since you did get back more than you thought, maybe we should talk a little bit about saving part of your refund for the future. Do you have a savings or a retirement account?
Me? No. I barely make enough to pay my bills.
Well, if you just put a little bit away right now, it might be a good start for you so you have something available when it comes time to retire.
I never really thought about that. Maybe I should.
Well, we offer a number of savings and financial services, so let me see if one of our Save Up representatives is able to talk to you right now.
Great.
Another satisfied customer. Now, those were some highlights of the quality review process, but please review the QR presentation that includes important information about assembling client packets, obtaining the proper signatures, and getting clients' returns prepared to be filed. Thank you for your time, and happy reviewing!